Something I was super excited to bring to you a couple weeks ago is another technology application or solution that I think is really going to help the one rental at a time family. Last week or 2 weeks ago, we introduced you to PRIVY. We talked about what they have been doing, what they will be doing in the long-term space. Well, folks, it launched Monday. So I thought we'd talk to Scott and Benson again, see what's going on at PRIVY, see how it plays in the long-term space. Scott, you reached out to me, so tell us what's going on. Tell us about the exciting Monday announcement.
Yeah, thanks for having us back. We are pumped. We launched our long-term rental feature on Monday. Probably the biggest feature we've launched since sort of, we got the whole app put together many years ago, and it's a really big deal for us. On top of the long-term rental feature, we just launched, I think it was 25 new MLS markets, including New York. I think it's going to be a super powerful tool for you and for your followers, and happy to show it off to you guys.
Yeah, well, let's just jump in. Let's see it. I'll ask some questions.
Cool.
We will do follow-on videos because I think the more and more I play with PRIVY, I'm starting to see how one rental at a time fans can use it. But let's look at some new stuff. What do you got for us?
Yeah. And before I show you the new stuff, I just want to spend just 5 minutes and doing a quick overview. We showed it to you a couple of weeks ago, but for those people that didn't catch it, I do want to just do high level. What is PRIVY? Essentially, what we do is we're tracking all successful investment activity across the country, using that information to help investors become experts in their market, and then automatically finding similar active deals to those people that are having success based on specific investor criteria or buy boxes.
Okay.
So this is our coverage map. We have third-party and public record data. That's something that a lot of our competitors have. But one of our biggest differentiators is the areas that you'll see in blue. That's across the country. We are direct to MLS, again, in those blue areas. This is something that none of our competitors do because it's such a heavy lift. But at PRIVY, we've spent the time and the money to build out a team dedicated to partnering with MLSs and getting under contract with these different MLSs to provide users with that data. So that MLS data is the highest quality, and it's really what makes us, I think it makes us much more powerful than a lot of other companies out there.
Well, I want to hit that again. Because
Yeah.
one thing that my audience will see is I do this daily financial news where I'm bringing them information, and I've often told them that Altos Research is the most up-to-date real estate information. And the reason Altos Research and the team Mike Simonson is so valuable is it's updated weekly on MLS data. It's active listings. We're not waiting for some closing 30 days later in some pending thing. All of this. If you want to know what's going on now, the MLS is the best data source. So this makes sense to me why PRIVY is investing so heavily in getting that. So that ties in.
Absolutely. So when people start using PRIVY, they'll probably, what makes a lot of sense is to come up here and click on fix and flip. What this is going to do is automatically plot across the country where all successful fix and flips are happening. We can go up into the filters, see how we're defining a flip. It's a property that was purchased, fixed up, and sold, was originally purchased at less than 75% of the ARV. A lot of different filters here, depending on what you want to look at: beds, bath, purchase price. Maybe I wanted to look at properties that were purchased at a deeper discount, so we can go down to 60%, run that search, and see all of the fix and flips that happened over the last year at a deeper discount than 60%.
Yeah.
We tell
people. I have a question here, and again, we don't prep these things, so this question might be a left turn. One of the things that we often hear when you look and read up on real estate all the time is flipping is not always profitable. So I know you're showing me where we have successful flips. Is there a way that we could tweak this data and look where we should avoid? Like maybe these flips are losing money or the margins aren't great, because it's wonderful to see what markets might be hot. But if you flip that over, what markets might be not? I don't know if that's there or not. So sorry.
It's a good question. Benson, go ahead.
Yeah, I got some input on that. So you can raise that percentage up to 90%, right? And then you'll see 2 transactions in an 18-month period. But one of the things that we don't have access to is what their costs are.
Of course.
So we don't know how much they actually spent. So they could have way overspent. Even on a house that was at 50%.
For sure.
They could have lost money if they didn't manage the process properly, or if they, hired the wrong vendors. And so there's a lot of stuff we just don't know. But typically when we're measuring how good a deal is, we use the gross percentage of ARV number, right? We got it at 70% of the ARV or 60%. And so in general, people start to think that a deal is right around 75% or lower, which is why we use that number.
Of course.
And then, we got to rely on the investor to, either make money or lose money based off of their experience and those sorts of things. So there's only so far we can take it, but
no, I think that makes sense. And I think you're right.
Yeah.
I think if you put that at 90%, again, it's not, again, you don't know all the variables, right? You don't know the actual cost. You don't know the holding cost, the cost of capital, all of that. But anytime we could create yellow flags, and I think you're right, take it to 90%, see what happened. That's going to tell you some markets that maybe are a little cooler or colder than other markets. I think that's the way I would look at it as well. So that makes sense to me.
Right.
One other thing I will note is that, when we use the fix and flip filter, we're not suggesting that you have to fix and flip.
No,
what
of
we're
course.
looking for is the data that you can use to prove after repair value. And even long-term rental type investors, landlords, use percentage of ARV to measure their deal sometimes. Like, man, I would love to get a deal at 60% of the ARV. And if it cash flows, well, then I'm way ahead of the curve.
Yeah. No,
right.
agreed.
So the easiest way to get a discount on a house is to find those houses that are next door to the renovated ones. And then what that does is it turns all of maybe the updated ones or the ones that have not been touched since they were built in 1950. It turns those into deals because now we can compare those to the renovated house, and that creates a margin that we can now dip into, which, one of the strategies that many of your users probably use is BRRRR. Right. So they're buying it at a discount, thinking about it from the perspective of a fix and flipper, but they don't get rid of it after the renovation's completed. They keep it as a rental. And so now they get to dip into both worlds, the best of both worlds, where you get the increase in the equity, you get the increase in the amount of rent you can collect, and now you've got the the deductions and everything else you get from rentals.
Yeah, I think BRRRR is an awesome strategy. I was doing it and writing about it in Bigger Pockets back in 07, 08, whenever that was. And it can work today. And I do think PRIVY is the protection that new investors, because I think a lot of people are sold BRRRR as an easy strategy. It's not easy. It's for the experienced. But if you do have something like PRIVY that's going to provide some protection and help give you some additional information, it makes sense. It's certainly worth the investment to avoid a bad deal, because really when I look at BRRRR is you're flipping the financing, right? You're going to go in probably with hard money, probably with private money. You're going to do a 3, 6, 9 month, whatever it is, remodel. Then you're going to go put on perm debt, which today is 7%, could be 8% for a refi. So you're flipping the financing. But yeah, PRIVY can definitely help protect people from unexpected bad BRRRRs.
The other thing I would say too is that with BRRRR, there is a bit of protection there for first-time flippers if they go into it thinking that, if I mess this up and I don't create enough equity and my costs are too much, if my only exit strategy was to sell it, I might lose money, right? But if you go into it thinking, okay, this could be a good fix and flip, but you know what? My first deal, it'll cash flow if the worst case scenario happens and I get stuck with it, I can still make money and just stretch that out over time.
Yeah, I like it. I'm just curious, is that Gary, Indiana there right in the middle with the number 42? I don't know my geography very well.
Yeah, I mean, I'm in Chicago, just outside of Chicago. So it could be.
Yeah, I got a buddy of mine who invests in Gary, Indiana. Can you just click on the 42 and let's see what happens? Yeah, look at that. Gary, Indiana. Millennial Mike, this is for you, buddy. Sorry, I just had to do that.
No, that's awesome. But it brings up a good point, that big number 42 and what Benson was alluding to about how you need to be in those markets where all that high investor activity area is. Even when you start to drill down into specific like neighborhoods within a market. If I was looking at, at this whole map, maybe I don't want to be in Hartsdale. There's not a whole lot of activity there, but maybe I do want to be in Gary or wherever these big numbers are. And as you start to drill down, you'll see that these clusters start to break out into, smaller clusters, and then eventually they break out into what we call a comparative market analysis.
Yeah, this is definitely going to be video number 2 for us today. We're going to talk about how I would use Privy if I'm interested in one rental at a time, but I don't know what market yet. So we're going to come back to this kind of view in a minute, but I want to make
Okay.
sure you introduce the long-term landlord
Yeah.
stuff that you've just announced.
Okay, so let's hop into that. Let me go back and start over Privy from the beginning here. So yeah, this is again, we're super excited about this. I know this is something that you and your listeners are definitely going to find valuable. Again, we just launched this on Monday. We've had a lot of great feedback. It's our long-term rental feature. And really what we've done is taken all of that machine learning that I just showed you in terms of comps and historical data, and we've applied that to the long-term rental market.
Okay.
We've got rental insights now on over 135 million properties across the country. We've combined that with our MLS data so that we can start to quickly and easily find areas or properties that might work better as a long-term rental strategy versus some of those other real estate strategies. So to start searching for rentals, maybe you want to start looking in your local market, or maybe you're open to different areas and you want to start sort of zoomed out, like we were looking at earlier, as sort of a more holistical view in terms of the whole country, to see where in the country I might be able to find a lot of deals that fit my exact criteria for LTR. So if we hop up in here into filters, here's the new button here, long-term rentals.
Look at that. It's purple too. I'm a fan.
And then we get this new pop out with sort of the major formulas that investors are using to determine what a good deal might be. Michael, I know you mentioned you don't think cap rate is the best or the smartest, but we do have that as an option.
No, I think, and you have to. I mean, clearly as an application provider, you have to have cap rate. That is the industry standard. So it makes total sense. I think it's a bullshit metric for individual investors. I think cash on cash is a much better, it's more simple. It's more the everyday, but you have to have cap rate, right? You're producing a solution for the market. My personal bugaboo is it's a crap metric that confuses people.
So we'll look at cash on cash return. But just quickly, if you can hover over all of these information icons, if you need a refresher, cap rate is essentially NOI or market value. We also have annualized return, which gets a little bit more involved, starts to include things like equity and appreciation.
Correct.
Here's gross yield. And then also cash on cash return, which probably gets a more accurate picture of cash flow, can be helpful when you're deciding on financing.
Well, let me tell you why cash on cash.
Yeah.
In my world, right? This again is a one rental at a time world.
Yep.
What I am trying to help people understand is, if I was going to go into an investment, what is my expected? I call it yield, right? What is I'm taking how much money out of my account? How much can I expect back? That is almost irrelevant on a single deal basis. However, I talk about buy box and daily discipline. If you execute this and you build a tracking spreadsheet that's 80, 90 rows deep, then you sort based on yield or cash on cash. You now have a priority list. These are the great deals. These are the good deals. These are the bad deals. So again, on an individual basis, I don't think there's any metric that makes sense, but that's not what I'm teaching. I'm teaching do the work, track, understand, and then and only then do great deals, right? Good or great deals. So cash on cash or yield is the metric. So
cool.
Sorry for a quick rant.
No, that's great. Let's just hop in. Let's see what's out there. What do you think we're looking for? Just I guess it depends on the market across the country. It could be different, anywhere from
that's exactly the point. Exactly. If you're in San Diego, California, your yield is probably 2% or lower. If you're in Gary, Indiana, it's probably 10%. I am not here, Scott or Benson, to tell anybody that Gary, Indiana is better or worse than San Diego, California. That's not my job. My job is to give you the tools, the framework, the mindset to go do the freaking work. And then you choose yours. If you want to invest in San Diego because you want to walk to all your properties, go nuts. Only do great deals. If you want to invest in Gary, Indiana because you live in Seattle and it's stupid expensive, Millennial Mike, well, go do the work and only do great deals. It's the same mindset. So again, sorry, my rant.
No, all good. Let's see what 8% looks like just across the whole country. Let's see what markets we think we can find a bunch of deals that are at an 8% cash on cash return. And again, this is taking historical data, 130 million properties, comparing those rents to what's currently on the MLS. I'm seeing, not surprisingly, but I'm seeing some big numbers in the Cleveland market.
This is exactly what I would hope you would see.
right.
I am not telling you Cleveland is better or worse than San Diego. That is not my job. Not my job. I'm trying to give you the skills to uncover it, and then you decide what you want. So I'm glad the data showed up as I would expect.
Yeah, absolutely. And right off the bat, I'm seeing some stuff that looks pretty interesting. And I also do want to mention that the large majority of these properties are active on the MLS today. And we talked about it last time. People are skipping over, people are being taught over and over again to do the skip trace thing and drive for dollars and do all these off-market opportunities that cost money and take time. We're showing you here that really the majority of these deals are actually available to purchase today on the MLS. So I don't know Cleveland. I don't know if this is market.
I want to hit this. I want to hit this again, Scott, because again, this is so powerful. One rental at a time. My book on Amazon. Every deal except one was out of the MLS.
Awesome.
Daily discipline, focus. Daily discipline, focus. Track, learn, average, do good or great. Folks, we're going to talk more and more about this in video 2 and 3 today. But this is sexy stuff. Again, none of these should be taken for granted, but it should give you like a metal detector. I think we talked about last week, kind of, hey, should I dig here? Should I learn more? Should I grow my network more? Again, I will never tell you one market is better or worse than the other. That's not my thing, but I will definitely give you the tools and process to get there.
Absolutely. Let me just pop up in one of these.
Sure.
This is, it's the third one I found. It's again, this is on market, listed 1 day ago. For sale right now. I could purchase this right now for $110,000. It matches a bunch of those formulas that we were looking for earlier.
So let me poke at this a little bit. Sorry, I geek out on this.
Please do.
So that 1,400 to 1,600, I'm going to guess that's monthly rent.
Monthly rent based on comparables, which we can show you down below. There's 3 comps about a half mile away, renting 1,600, 1,600, and 1,500.
Yeah. So again, folks, I want you to hear me here. Privy is it's the metal detector. I would still want you to validate the hell out of this. What I think, again, we'll get into this in video number 2. This is telling you where you need to scratch and dig deeper. A lot of you come to me with like, I don't know where to go. I think Privy might be that tool that says, you know what? I'm going to spend a week. I'm going to bounce around the country. I'm going to figure out where I have a network and a Rolodex, but I'm going to choose to do Michael's course and dig in here. And,
yeah, absolutely.
Points of validation. I think this is pretty cool. Because then again, you could call people and meet people and, maybe, again, I have no idea. Maybe 2 of these houses are on the other side of the freeway, which I guess on the map they're not, but I'm going to make it up anyway, over across the freeway. And, that's just different. But yeah, this is some pretty cool stuff.
I'll mention to that point, you can tighten up those comps as much as you want in the settings. You can change the radius, you can get, closer in, further away. You can change the bed baths, the tolerance in terms of the square footage that you're looking at. You can get really tight there. And as I go look at more rentals, I see that there's this one, 937 Montford. So a couple houses down, rented at 1.4. It's essentially the same square footage. These are all same bath, same square foot, or same bed, same bath, same square footage. They're all good comps. This would make
now. Where would you have sourced that from? Just curious.
Benson, are we able to chat about where
No.
Yeah.
So it's an online system somewhere that you got.
We're partnered up with one of the largest rental data providers in the world.
That's all I needed to hear. That's fine.
Yeah. This is not derived data. Like,
got it.
If you go right now, go down and show them one of the comps, Scott. Like, those are actual comps. So we can show you the address. You can open the property up. You can see the property remarks. Like, this is the rental listing itself.
Got it. No, I got it now. Now it makes sense what you're doing.
And it looks like, our subject property might need a little bit of work, but the nice thing, since we're partnered with the MLS, we can show you that. In this one, it doesn't need a whole lot of
That's exactly right. The one that was running at 1,400, the kitchen's been dialed in. It's got the granite, the cabinets are painted. Now you can buy a junker, and then you could do, because again, what is the cash on cash or yield going to do? Down payment plus make ready. In this case, well, you know what? We're going to have some make ready costs. And oh, by the way, I might have just found another bedroom, because I'm guessing this is in the basement somewhere. That might be a bedroom waiting to happen.
Right.
So again, these are all things where an investor can start digging for gold.
Absolutely. Absolutely. Yeah, I like that analogy of the metal detector. What we've done here is, I mean, sifted through thousands of properties that are that should be for sale on this screen right here and narrowed it down to, we're still looking at a lot of opportunities. There's 201 properties here, but really use that metal detector and sifted through the sand and found, and I would still go in and of course do my research. I don't know this market very well, but with just a little bit of research and looking at the comps and looking at the level of construction I might need to do, have a really good sense of what I need to do to get into the rental market in Cleveland.
No, this is exactly what I mean. You've go ahead, Benson. Sorry.
I wanted to add another note here. One of the new things that we added in this new release is the ability to network and connect with real estate agents that are doing business in these other markets.
Oh, really?
So you can see at the top there, Sarah Marnell.
Okay. Yep.
She actually is an agent who operates in the Cleveland market that uses Privy. So she knows how to use the system. She is an active user. She knows how to work with investors. And so that's one of the new things that we're moving forward with is really trying to connect investors with investor-friendly agents so they can do business either in their backyard or in remote markets. And that would be tough for somebody who's brand new in a brand new market, right? They don't know who the agents are, but we're happy to make those connections.
That is pretty sexy, frankly. Because again, one of the things somebody could do with Privy, get the metal detector, find the spot, and now that you're helping them grow their network. One of the things in one rental at a time is you got to meet 2 new people a week. You just gave me one of the 2 people I need to meet. And oh, by the way, if Sarah is truly investor friendly, she's going to know a contractor, she's going to know a painter, she's going to know this, she's going to know that. So you're shortcutting. You got her phone number and her email. Check it out. That's crazy.
Oh yeah.
That's crazy. All right.
Yeah.
Any more stuff to show us, Scott or Benson, as we get out of video one?
That's it in a nutshell, Benson. Anything else I should pull up here?
No, I think we covered the majority of it. There's one of the other things that we've done is, we've got direct to MLS data, and that's where the blue is. But we've also did a partnership with a major data provider that really raises the value and the quality of the areas where we don't have direct to MLS. So even in the yellow, in the dark gray areas on the map, that data is almost 100% improved because we just increased the value and the quality of it. So for even those people that are looking for properties in, say, Montana, they're going to have a way better experience using Privy than they may have in the past.
That's awesome.
Right.
So again, folks, Privy has been nice enough to give ORAT a coupon code or whatever it's called. Scott, do you remember what that is?
Yeah, it's your acronym, ORAAT. Is that right? One rental at a time. ORAAT.
Yeah, you got to get those 2 A's. Yes. One rental at a time. So there'll be a link below. You can use the coupon code. What do they get for that?
They'll get 30% if they sign up for an annual membership, 20% if they're going month to month, and it's getprivynow.com. Getprivynow.com,
guys. Thank you so much. Pay attention in video number 2 because I'm going to drive the bus and talk about 2 things that I think will really benefit one rental at a time fans. Scott, Benson, thank you so much.
Thanks, Michael.